how to make money off of Alphabet or Google's stock split. What is happening, investors? It is your boy Jack. I am not a financial advisor, and we just got some quite considerable news from Google that has led to a quite considerable move. Currently it's up 6.28%, but it was up over 10% at one stage based off of this news. Two primary reasons. One came from a good earnings report, and the other came from the announcement of a 20-to-1 stock split. Okay, so I myself, I'm a Google shareholder. I've bought it initially in the $1,300 range. I bought it a few times on the way up. It's not a huge position, but we're up about 100% altogether. I want to make some more money from Google, baby. So today's video is going to be all about how to make money from this stock split. Not just discussing, the fundamentals of Google, whether or not it is a good or a bad company to buy. I think just looking at the stock chart tells you that answer. But we're going to be speaking about some shorter term things, some interesting things that have happened over the last few months with Google's stock price, the 3K psychological number that is quickly becoming a resistance, and what has happened in the past with stock splits. The two examples we're really going to be looking at are Apple, what happened when it was announced, and what actually happened when the split happens, and Tesla. They're two recent examples. They're two that investors more than likely will remember because they haven't happened too long ago, and they both offer quite similar things that happened. Now, there is one big difference, is that Google's split is not going to be happening for quite a considerable period of time, okay? All shareholders as of July 1st will receive new company shares on July 15th. So that is one more thing we're going to have to take into account. And that's what today's video is going to be all about, my friends. If you would like to potentially get a free share of Alphabet, sign up to Moomoo. You can get 5 free stocks, each valued up to $3,500. Technically, after split, that would be 20 free shares of Google if you are one of the lucky ones who gets it. It'll be the link in the pinned comment. It's also the first link in the description. It takes a few minutes of your time to set it up and get your first free stock. It is literally free money, baby. So go ahead, click that link. Also, really quickly, could I please ask you to hit that like button? It really helps me out. Drop me a comment down below. Let me know if you plan on trading Google at all or just adding to your position. And please, my friend, if you are new around here, hit that juicy red subscribe button. So, with that being said, Google's ad strength, stock split, plans boost Alphabet shares. Okay, so that is what we said at the start. It came down to two primary reasons. And really quickly, we will just point out the earnings, okay? For the quarter ending December 31st, it earned $30.69 a share on revenue of $75.33 billion, compared to a profit of $22.3 a share on sale of $56.9 billion in the year ago period. So yes, Google are doing extraordinarily well. Even without announcing that stock split, they did definitely deserve to go up in value to this extent, in my personal opinion, despite the fact that all they do is go up, really. So they smashed estimates. They had absolutely fantastic earnings. That's what's happened, okay? But what we are really looking at is this. They said they would implement a 20-for-1 stock split. So say, for example, Google is trading at $3,000 and you own 1 share. Well, you're going to own 20 shares that are worth $150 each. The primary reason people do this is just to make it appear cheaper, to make it more readily available to the retail investor. Say, for example, people use brokers that don't allow partial shares. You can just go ahead and, buy 1 share for $150 instead of 1 share for $3,000. That's the main reason it happens, in all honesty. Apple has done it on several occasions. We saw Tesla do it. A lot of people do it once it gets really big. A lot of people will be looking towards Amazon now to see if they're going to do one as well, I would bet. But anyway, in the form of a one-time special stock dividend on each of the company's Class A, B, or C stocks. So it doesn't matter which you own as of right now. Now, here's the thing, okay? If the split is approved by Alphabet stockholders, all shareholders as of July 1st will receive new company shares on July 15th. Okay, so we're going to go to the examples of Apple and Tesla. Okay, so Apple, first of all. Here is where the split was announced, like literally right here. And you can see that it led to this continued upward move, going from the realms of pre-split price $92 all the way up to $138 at the absolute peaks, okay? But you will also see that here's where the actual split happened. And it went down a little bit on that day. It went up over the coming days. And then it really came down. So is this a common theme? Is this something that happens often? What does history actually tell us? When the split's announced, we often see a little bit of a pump. We see that stock price go up. It continues for a while. And then it comes down, okay? You'll see it still ended up above pre-split announcement, but it came down a long way, and it took, a fair few months to get back to those originally high prices, okay? When we look at Tesla, we see a relatively similar thing, okay? Here's the split announced, right? August 11th, right here. And it goes from, again, pre-split, $276 all the way up here to nearly $500. The split happened here. Again, it had 2 nice days, and then boom, there was that sell-off here. If we just check really quickly, why can I never find this short? If you short at the very top at $500 a share, in the span of literally a few days, you could have made 34% on that short, okay? Riding the wave. And let's say that you didn't open it there. Let's say you opened it the day after that red. You're still looking at a 30% green day. So we can see this similar story with Apple, okay? It goes up. If people were lucky enough to short at the very top, in no time whatsoever, they made 25% on Apple. People also made money riding it on the way up. You got to remember that. So how do we make money with these splits? A lot of the time, you just got to take advantage. A lot of people here are buying the news, and then they will sell when it actually happens. We have seen that with the 2 biggest recent examples, Apple and Tesla. In other news, if we go to eToro, they say how the split impacts stock price. There's no way of knowing how each company's stock price will react to the split. Of course, you can't know for sure. There is historical data, okay? According to Bespoke Investment Group, between 2015 to 2020, stocks of companies that announced splits gained an average of 2.3% between the time they announced the split and the time it took place. So we can use this data to do with Google to say a couple of things. One would be that it's up much more than 2.3%, so we could expect that it could come down. There also was a gap created on the daily, so we really could expect it to come down to here. I mean, even if you open a short position this very moment as I record this and you bring it down to fill that gap, that's a 6% gain on Google. That is truly extraordinarily likely to happen at some stage over the next couple of months, if not literally in the next couple of days. Especially, I bet a lot of people don't realize that this split isn't happening for months yet, because they're just thinking with Apple and Tesla it was a week or two. This is going to be months away. This hype is going to die off. It will probably pick up again just before the split happens. One other thing is that Google is at nearly $3,000, and that's a psychological number, and you can see that it really, and I truly mean really, struggled to break above there whatsoever, and it came all the way back down to 2,500. So with that being said, it's going to be tough for Google to break that mark, in my opinion. It's going to need something more than these good earnings and this split. So right now, you got to watch this gap. If it went back up to 3K, I would be very tempted to try short it down towards the 2,750 mark, or even 2,800, and take away an easy 7 to 8%. But we're not going to be able to know how price is going to react to the split until closer. We're going to have to wait a while, but this is a trade to keep in the back of your mind, in my opinion. And I don't particularly like the thoughts of shorting Alphabet, because look at that chart. It is an absolute beast, my friends. If we look at that daily RSI, you can see it approaching overbought levels when it was only at oversold levels a matter of days ago. So not the volatility we are used to seeing with Google, but it is happening now. Nearly 70% of stocks outperformed the SPX 500 index over the same time period, so 2015 through 2020, during the year that followed the split. So that could be a sign that it's going to be another good year for Google. It's going to be a sign that, you know, if there is a pullback, say towards that 2,700, 2,750 mark, that could be a good buying opportunity for the next year. And maybe we could be looking towards another year of Google where we can expect 15, 20, 25% earnings, even given this market. They're one of the companies who's going to continue doing well despite the fear in the market, despite rate hikes, etc., etc. So I think the easiest way to make money from this Google stock split is there's probably going to be a day of, you know, selling somewhere along the line. There's probably going to be a day where people try to take their profits and this gap is going to get filled in. Buying anywhere around these marks and holding it for a year is going to be the easiest way to make money. If it gets bought up and up and up, maybe approaches 30, 50 or 3,100, maybe a short-term short position will be a good idea. Me personally, I'd be a little bit cautious of doing that. It is Google after all, especially if you're playing options, it gets even riskier. But anyway, my friends, that is how I believe we're going to make money from this stock split, just by buying and holding Google. You know what I mean? The fundamentals haven't changed because of the split. They have, because sales have gotten better and they smashed the Wall Street expectations out of the park. We can look back at recent history, see what happened with Apple and Tesla. And again, you can make that argument that if you get it at the top, you can make a really nice, quick, short profit over the span of a week or two, especially given the current market climate. Red days do happen a lot more often than they did even back here, so do be aware of that, my friends. But anyway, If you watched this video all the way to the end, you are a true legend, and I really do appreciate you being here from the bottom of my heart. Your support means the world to me. Remember, if you'd like those free stocks, click that link in the comment or the description, baby. Get yourself some free money. You're crazy if you don't. It only takes a few minutes. You could get Google, and then that could turn into 20 shares. Imagine getting 20 shares of Google just for clicking a button. Hit that juicy like button for me. Drop me a comment down below. Subscribe if you're new around here. I hope you have a beautiful, blessed day. I'll see you in another video very soon. Peace.